All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. This episode is brought to you by our friends at Avalanche. They're the layer 1 blockchain that is fast, stable, and scalable. You're going to be hearing all about them later in the show. For now, let's get into it. All right, everyone. Welcome back to another Bell Curve Roundup. You got Michael's 1 and 2, Vance, and fellas, welcome back to the show.
What up?
What's up?
Black Hoodie Gang this week.
You think Vance and Michael are on their game this week? You guys were off last week.
Michael couldn't even get his internet working.
Yeah. Technical difficulties.
Vance, you really wanted to speak.
Last week. It was not looking great last week either.
I mean, the good news is there's nowhere to go but up from here.
Yeah, exactly.
The bottom is
Here's
in.
the thing. You guys actually let Yano and I get away with murder last week because we were wearing matching shirts the entire broadcast. You guys didn't say a single thing. We were like, there's no way they don't call that out, but we got away with it. So.
Are there more co-founders of Blockworks, or is it just you two?
It's just two of us, but there was a third.
There was a third.
There was a third. Yeah, there was.
Little known story.
Little known, yeah. Getting to some Blockworks lore here, yeah.
You know,
Okay.
sometimes the best addition is subtraction.
If you're listening to this, buddy, we love you.
I actually talked to him last night, and I know that he does listen, so we love you, buddy.
We love you, brother.
You know what we were going to talk about that we didn't talk about last time was Michael and Vance's co-founder dynamics.
Oh yeah,
So, at some
but
point
let's
save
we
that.
got to give people something to look forward to. So let's wait till the end to get into that. We got you also have a surprise, right, for us this week?
Shut up. No.
No. All right. Let's get into it here. All right. We got a bunch of stories. I want to talk about Binance's proof of reserves. So Binance released, they tweeted out that they were going to have a proof of reserves system fully in effect. And there was a little bit of pushback that came back from Jesse Powell, who's the founder of Kraken. So Jesse had kind of gone on record earlier and said, hey, I'm going to be better about calling things out when I don't necessarily agree with him. So he tweeted out some problems to point out. And, a couple of the things that he pointed out were, one, there was BBTC and BTCB that was being used interchangeably with BTC. Those aren't necessarily the same thing. That's BTC on the Binance Smart Chain, and then there's wrapped Bitcoin on ETH, basically. And Binance is the issuer of both of those wrapped tokens, so those shouldn't necessarily be equated one-to-one. There's a risk on the part of the issuer there. The other thing is there were negative account balances. So the way spot margin sort of works is when you're taking out a margin position at an exchange, you put up a tiny bit of collateral, and then basically you are trading with more assets than you actually have. And the way that works from an accounting standpoint is it's a negative balance for you because the exchange has loaned you money, which shows up as a positive asset for them. So there are like a whole bunch of different sorts of problems with and Nick Carter, he said he's not the expert on this, but he does talk about it quite a bit, and he's very knowledgeable. I'd probably call him an expert, to be honest. Has pointed out that he saw some problems with it as well, though he has yet to respond with a piece. Do you guys have any take or particular thought on the proof of reserves?
I mean, looking through a couple of these things, like the reserves is just like one half of the equation. Most of the trouble that these exchanges seem to get in is like taking coins, staking them, making them illiquid, taking on loans, lending out collateral to other parties. Like, I guess this does prove that there is an aggregate large amount of customer deposits in the system. It doesn't show you exactly like what they're being used for, what they're pledged against. The negative balances aren't alarming. If you have any sort of margin trading, like that's how it works. There's a big pool of assets, and then some people have negative balances, and that you're hoping that your auto liquidation mechanism basically nets them out before they go truly underwater on a negative basis. But this is it's a very basic form of proof of reserve. It's also like audited by some auditor that I've never really heard of. I think it's a step in the right direction, but like it doesn't give us any confidence to like go put a bunch of money on Binance. I also think like generally, this is not part of this story, but where we kind of see things going are like people that are in DeFi chasing like long tail coins, like, you know, doing things like that on chain. And then, you know, people that are in regulated venues, at least if you're like a US presence, like everything in between where you're taking counterparty risks, where you don't know what the balance of liabilities and reserves are, that's kind of like out of consideration for the US based funds. So maybe that's a standard that's okay for the Asian funds or the more international ones, but I don't know. I just don't see us getting there anytime soon in terms of putting meaningful assets on that exchange.
Yeah, only thing I'd add is just like to reiterate, this is half of the equation, right? Accounting is assets plus liabilities equals shareholders' equity. What we have right now is assets. We don't have any idea of what the liabilities are. If we could get a sense of equivalently what the proof of reserves are for the user deposits, and then be able to see if there is any mismatch of what the assets are versus what the user deposits are, that would be an even further step in the right direction of being able to say, okay, like, is there an asset liability mismatch? One of the things that, you know, we've spent some time going through is with all the details of, you know, all the 5 or 6 concurrent bankruptcies going on, some of the details that are coming out of like what was happening in those situations is pretty damning and also crazy. But one of the largest takeaways is there's just a massive asset liability mismatch. And if that's something that's going on underneath the hood, A, proof of reserves wouldn't be able to tell you that. But B, that's really all what needs to be figured out. Like, it doesn't matter whether or not you have 100 billion, 150, 200 billion dollars of assets on the chain or on the platform, if you have greater liabilities, or frankly, even just a mismatch of what those liabilities are.
Mm. So it might actually be worth, you know, just giving a little bit of credit to 2 of the exchanges that are actually sort of pioneering proof of liability. So to your point, Michael, what we saw basically after the aftermath of FTX and all these exchanges came out and said, we're going to do proof of reserves. They were only doing proof of assets. They were just pointing to a wallet that had a certain amount of Bitcoin. That's completely useless because you don't know what the liabilities that correspond to that asset were. But actually, I think it was BitMEX that pioneered this idea of proof of liabilities. And it is kind of cool because it's something that you can only really do on a crypto exchange. So basically what you want to know is, to your point, you want your assets to match your liabilities. In this case, you want the amount of Bitcoin that you have to equal the amount of customer deposits, right? Let's assume it's just Bitcoin here. So what you can do basically is, or the approach that BitMEX pioneered was you could basically do a full list of liabilities within a Merkle tree structure. So all the liabilities are at the top, but the rest of like each individual customer is arranged as a leaf in that Merkle tree. And then you as a customer are given enough information to basically test to see is my personal account included in that top number list of liabilities. So obviously not everyone's going to test, but like doing some generalized testing ability, that's like pretty cool. The limitations of that are just because your deposits are in a wallet balance that match the assets of the exchange doesn't mean that they haven't pledged that as collateral in an off-chain sort of transaction. So there are limits to proof of reserves and proof of liabilities, but it's a step in the right direction. And it didn't seem like Binance, they've got a little ways to go, I think.
Totally. I mean, not only that, but like, so there's a solvency issue, which is if you don't have enough assets to make up for the actual liabilities. There's also an illiquidity issue. So if you have a bunch of ETH on a platform, but they've taken that ETH and they've staked it, and this is pre-Shanghai, you can't get that ETH back. You know, it's not ETH. It's some other asset that is staked and illiquid. So like there are 2 types of issues that you can run into. And yeah, I think this is, once again, half of the equation, but it's really, frankly, not even the half that matters.
The other stuff, I think the last point is like, if you have a scenario where there's a lot of volatile price action and somebody makes bank on that, you can bankrupt an exchange, especially if you're like, you know, able to trade 20x plus leverage like you are on Binance. Like if there is a substantial move and say like somebody nets a huge windfall from something like shorting, you know, UST or Luna, like that can easily absorb all of the existing assets that you have in the system. And so like it's not just your current liabilities, it's like your future expected liabilities if this volatile price action plays out based on the open interest that's on your exchange.
So you know, just taking the thread a little bit further, one piece of news that did come out and I can't remember which situation it was relating to, but there's actually been a couple of court decisions in the last week as to who owns these assets. And one of the biggest issues I think that most consumers had with whether it was BlockFi, Celsius, Voyager, probably Binance as well, is nobody actually read the terms and conditions. And in some of these instances, literally the terms and conditions state that when you give your assets to the platform, these are now platform assets. These are assets that the platform owns and has, authority to do whatever they want to do with them. And so if you're taking your ETH and you're putting it into a platform and they're taking that ETH and they're staking it, or they're converting it to Bitcoin, or they're converting it to dollars, and you still have that ETH liability, it's totally fair for them in the terms and conditions in certain situations for them to go off and do whatever they want with it. And so effectively you're pledging these assets to like a crypto hedge fund who's going off and doing whatever they want to do with them. And one of the things that is being discussed right now and being decided right now is who actually has authority over these assets. Let's say in the case that there's a bankruptcy, or in an ill-solvent situation. So I generally think like all of this stuff is going to get worked out now, but one variable here is people need to read the terms and conditions for these user accounts, because they have very strong implications as to who has authority of these assets over the long run.
The other thing about rehypothecation, did a podcast with Ben Hunt who was explaining this. When you give your assets to a third party, let's say an exchange in this instance, and then they go pledge that as collateral, the way the claims will play out is ultimately whoever they pledge that collateral to will have a senior claim to you as the depositor. So that feels crazy unfair, but that's how it works. So that's why you got to be super careful.
That's exactly the situation I'm talking about.
Yeah. Like think about the situation with BlockFi suing SBF personally to get his Robinhood holdings. BlockFi is a secured creditor. All of the people that are deposited in FTX are unsecured creditors to that claim. And so BlockFi gets paid back first. And then I guess the creditors will need to go sue BlockFi. Like the FTX creditors will need to sue BlockFi and the BlockFi creditors to get those assets, put into line to get distributed to FTX. It's just like this Russian doll of creditorship that's just a mess. But unfortunately, it looks like most of the unsecured creditors, aka the depositors, are generally last in line for a lot of these things.
Yeah. And I just think the reason why this stuff is important right now is, what's happened with FTX is a negative situation. There is a silver lining if we can do things better than we did before FTX. So getting things like proof of reserves right is sort of the bare minimum that we can do. I'm kind of the mind that we'll always have some centralized exchanges. There'll always be a subset of people that wants the convenience instead of owning and managing your own keys. But there are ways that you can mitigate some of the risk of surrendering those keys to someone. So I don't know. I think Binance, if they want to get like a perfect scorecard on this, get a big four. I don't know who Mazda. I looked it up. They have 42,000 employees, so
no, they're huge. Legit. I know them.
Yeah, they're pretty big, but they're not a big four in terms of I think you need that. And then there has to be there needs to be proof that you actually have the keys, right, and that you control the wallet, the private keys to the wallets. And then you can't include negative account balances in there. That messes up the whole calculation. So there are minor, we're on the right track, but those are the things that they need for a perfect scorecard, basically.
Yep. I mean, also just like to say this is what we do every single year as a fund. We, from our auditors, have to receive, some amount that we have to send from all the different wallets that we have, and they run a test to make sure that we have access to them. And this is just like par for the course for the industry. And so I think they're not too far off, to your point, Mike. Like, they can do this. It's just a matter of like figuring out what the most reliable process will be to get both sides of the equation.
Yes. I mean, biggest takeaway is that even though they hired some good people on the venture side, like good resumes, maybe, I think that, I had talked to a lot of VCs who were like, yeah, FTX seems to have this good strategy on the venture side. Like a year ago, people At least some VCs, maybe not you guys, were saying that. And it just looking at this portfolio, they were even more clueless than about running an exchange. Like they were punting into like not even crypto company, like weird fintechs and like real estate deals, and it was like it wasn't even crypto companies. I think if you sent them a pitch, they were just going to say yes. That's what it looked like.
It was like, I think a couple things. Number one, they were known to like set the floor of like the Aptos and Sui private deal valuations. Like they wouldn't let anything clear that was like a legit Aptos Sui product for less than like 100 million for seed. And like the same with Solana. And so like they were kind of backstopping that implicitly or explicitly. I think my favorite investment that they made, do you remember when they did stocks for like 4 months last year? Or like 6 months. Yeah. But it was also through that like weird, sketchy Swiss brokerage. Yeah. And like you had to like be like, I forget if it was like European or like KYC with the German subsidiary of the Swiss. And then you look at their venture sheet and they put $320 million into Digital Assets AG, which is the broker that allowed them to run this like stock experiment. And so like, I don't know what they were thinking, but maybe it was like, we want to do stocks. All right, how much does it cost? 320 million. Okay, cool. Invest in that company, get them to do it. And then it like basically just like went nowhere. And I think that was kind of like very symbolic of the intellectual rigor and diligence they were doing, and like the level of like investment strategy that they had. But there's a lot of like just like really funny looking ones on that sheet generally.
I mean, one of the largest takeaways of my reading of this is just how large this sheet is. Like, think about it, you know, Alameda, FTX, all of the different venture investments probably started in earnest in 2020. I don't think they had the capital to really do it in 2019. So we're talking about less than 2 years, a year and a half, and they've done over 400 investments. Like, there's just no possible way that there's any sort of rigor, strategy, or diligence that can be done if you're doing that many deals in that short of a period of time, especially to this size. The other takeaway that I have is, you know, while you could probably discount basically everything with like a 50% haircut, maybe even a lot of these with like an 80 to 90% haircut, I still think that, you know, there is some value in some of these investments, and there could be like actual value in some of these investments. And I think we talked about this on a previous pod. But there was some bankruptcy proceeding that happened. I think you were talking about it, you know, where like part of the creditors got the portfolio of venture investments that ultimately ended up making everybody essentially whole.
Oh yeah, yes, with on Empire.
Yeah, I can't remember which example that was, but there actually is some residual value here for FTX claims. I think it's unclear as to, you know, how much and when that'll happen, but there will be some value that you can probably assume from this. Most of these are going to zero, but some of them I think will be valuable.
Do you have the sheet or the FT?
Yeah.
Can we throw that up here? Like, I just want to see what the biggest ones were again.
Yeah, here, I can share it.
Yeah. Oh, yeah. I was gonna say like I think there are a couple angles on this, but I personally think there are a couple of very big checks to some very small names. And I would be very curious to see once you dug into who were associated with. Okay, ready? There's a $500 million check. Or sorry, $300 million check. Yeah, written to K5.
Right.
K5
I looked
Ventures.
it up. Do you know what K5? I couldn't find anything relevant on K5. Yeah.
So I got something here. I'm not, you know, it's like a 6-person venture team with no companies that I've ever heard invested. I'm not 100% sure.
The other one was Modulo Capital, I think.
So that is FTX. That is Alameda. It was registered at the exact apartment that Albany Towers that FTX was living in. And what I've heard is, you know, that
Vance, maybe they just found another great entrepreneur based out of Albany in the same apartment complex, and it was like, what a happy coincidence. Yeah, it was ran into in the hallways. Yeah.
If you look at the date that Modulo was registered, it was registered basically a day before Luna collapsed. And you know what the scuttlebutt is on Twitter, at least, is that this was a way for Alameda to hopefully shield the remaining cash that they had right after like this big blow up happened. And I think that's like, obviously that's basically fraud and or money laundering. Like, that's for the courts to decide. The other one that I think is a funny big investment that he made is the half a yard that he put into Anthropic. and that is a plant-grown meat startup. So like an Impossible Foods competitor, and you think about the things that could potentially make customers whole on like a 20-year basis if like you get really lucky and one of these things returns. I think Anthropic or whatever it is probably the most real investment at size that they have, and
No. The real investments are, I think, the venture funds. I mean, they put a couple $100 million in Sequoia, Paradigm. I think there are a number of other, like Altimeter, I think was on there. Like there's some real investments. Like putting half a yard into some vegan meat company.
No, it's not a
Like,
vegan meat company. It's an AI research firm. It was
oh, sorry,
it was the Skype. It was the guy who founded Skype created it or something like that.
but like taking pot shots with that much capital at single companies, I think that's gonna be harder to return. The funds themselves, I mean, I don't know if the capital has been called or like what the deal is, or if those are just like commitments, or if those are actual investments. But I would imagine that the funds can have some residual value. That's what I was referring to when I said there was some residual value here.
What about this gigantic investment in Genesis mining? Has anyone dug into that? What is good with that? That was like is a yard $1 billion? That was
Yes.
a full yard. Did I do that right? Yeah, that was
Nice. Nice.
Did I get that one? Yeah, but that was a big one, and I haven't really heard anyone dig into that, but that struck me as a very weird bet.
the interrelation between these entities is just bizarre. Like
Bizarre.
FTX, Alameda was an investor in Genesis. Genesis lent to Three Arrows. Three Arrows owes BlockFi money. Three Arrows also owns Voyager money, who was bought by FTX. Like, you kind of get this idea that the money was moving in a circle. And there were some fees or whatever being stripped off as consideration in between. But, like, this looks very circular.
Yeah, 100%. Here's a good one actually. There was a small one. There was a $25 investment in a $25 million investment in something called Toy Ventures.
Oh God.
And I'm going to ask you a question. Does the name Ramnik Aurora mean anything to you?
Yes.
Yeah. All right.
Yes.
So I got to give some credit
Big shout out to Matt Walsh.
to Matt Walsh from
Legend.
Castle Island Ventures, who has a great 2-minute rant on this. But Ramnik Aurora was a relatively high up member at FTX, but he was the head of product, head of investor relations, and he ran corp dev. So you would the implication there being, if you're the head of product, shouldn't you kind of know if there was a back door that's in the middle of your product? If you're heading up investor relations, shouldn't you know how SBF has the ability to stake $500 million to buy, invest in vegan meat companies or AI or whatever? If he's the head of corp dev, he was sort of the key man, and he also got a $25 million donation to his venture fund. So maybe some answers from old Ramnik Aurora that we might demand here.
Creditors are going to claw that back. Congratulations, you had it temporarily, but that's
Yeah.
coming back.
Yeah.
I mean, there were a lot of them. This was also Matt calling this out. He's like, Rockbird LLC raised 10 million from VCs. Like, usually most VC-backed companies are LLCs. Like 15 million into Lonely Road. Lonely Road's not a real company. Like there were a bunch of these.
No,
It's
no,
a
I've heard
cesspool of
Lonely Road.
crypt. Really?
No. I think the net of this, and this kind of dovetails into I think which is a larger discussion is
Oh my God, this is the website for K5 Ventures. Oh God.
Yes,
let's see it.
Yeah.
pull it up.
Yeah. That's why I was like,
How much money did they put into this again? Oh yeah.
300 million.
300 million.
Yeah.
Get ready to impact the world, baby.
Investment strategy, go to market focus. Boom, sign me up, baby. That is putting me over the finish line.
Yeah, hit their portfolio. Can you name a single company?
These are not real companies.
Well, Enginero is.
Compass. Put money in the Compass.
I don't think that's the same Compass. It might be.
Sign now. Yeah.
Oh, that's Compass Mining.
Yeah.
Yeah, this doesn't really look like a fund that you'd put $300 million into.
I mean, they can't even find
What
a
is
good
Coin?
logo.
There's a company called Coin.
Oh, site cannot be reached for people who are
Oops.
not watching along.
Whoops. Yep.
Oops.
Oh God,
Not
these
great.
yeah,
So-
it's pretty cringe.
So I think like the point that I would like to get to on all of this is, say that the whole is like at least 10 billion. It's probably bigger than that if you think about, all of the mismatches and all of just generally like the user deposit liabilities that they cannot cover. And if you assume that the 10 billion was made up of, pro rata crypto assets, so like, Bitcoin was probably like 40%, 4 billion of the 10 billion. Maybe ETH was like another 3 or 4 billion of the 10 billion. Maybe like a portion was stable coins, a portion was like long tail alts. Like if you think about the price action of last year, really what was happening was they were taking this ETH, this Bitcoin, the stable coins, they were selling the ETH and the Bitcoin, they were buying Solana, they were buying FTT, they were buying Serum. And like even if you look at the price action this year, like there were these weird levels, like $30 of Sol, $22 for FTT. Where like most mornings I would wake up and I would just like try to check where Sol and FTT was to see like what type of day it was going to be. And like there was just like this like concrete floor that they would bounce off of. Like it would never let it drop below that. But like if you're looking at the price action of the last year and a lot of the narratives and the themes and just the ideas that were powerful, it was kind of all this like Alt L1 wave. And the Alt L1 wave, in my opinion, was fueled by people looking at Solana that was pumped to like $200, $250 fraudulently, I believe, by SBF selling Ethereum and Bitcoin, artificially short these assets to pump Solana. And then everyone else said, okay, cool, Solana can be worth more than 100 billion, so can Luna, AVAX can run, like BNB, Matic can run. And like there was this idea that maybe you could actually create a legitimate competitor as money and on the scale of money's opportunity as Ethereum and Bitcoin. I think without that in the equation, the market looks much differently. There's, potentially 10 billion less of selling pressure. So like another EIP 1559 less of selling pressure for Ethereum. Same probably with Bitcoin. But on the tail side, like these Alt L1s, like that narrative and that idea is like fundamentally broken in my opinion. Like that was all reliant on basically the bidding of a fraud, which hopefully next time is not going to be there. And I think that's like the main takeaway for me is like, if you're looking at the last year of price action or the last 2 years as a guide to where things can go, you're probably entirely wrong. And it's just going to be really interesting to see the relative strength out of this. I think the people who believe that Solana is going to go right back to where it was, you're basically betting on another SBF coming along and doing the same thing.
I mean, so to play this out and understand this as a theory, but also, we'll see whether or not, that is complete fraudulent action taken by the FTX and Alameda teams, correct? Like there's no way to like say that is not, you can't like say that, oh, it was a margin account that got away from me and like, ooh, I misplaced some bank accounts. It's like, no. That is legitimate fraud. If you're taking customer deposits, selling the assets that they have and using that to buy other assets, right? Like, am I missing something?
I think that's what we've been saying for the last month. Yeah, I'm in agreement if he's done that. Yeah, I agree with you. Just out of curiosity, what's the rationale for him wanting to pump Solana? Is it just that there's such a heavy correlation between Solana and all the stuff that's built on Solana? Is that why there's the need to support that price instead of just FTT?
It looks like SBF personally owned around 10% of Solana. And so he was taking ETH and Bitcoin, selling it, or just taking stablecoins, buying his own coins, which he could then use his locked Solana to sit on as collateral and hedge out via perp, and he gets US dollars back in his account. And then, like, the price action of Solana is something like I have never ever seen. Not even 2017 Ethereum really matched that level of like, oh, it went from 20 cents to $250 in 6 months. And I think there was this idea that there was like this new paradigm and like these things could trade as money and it would just be like off to the races. But that idea is seriously damaged in my opinion. Like I think next cycle, the Alt L1s are not going to be the main drivers of the narrative. It's going to have to be applications with utility, decentralized staking protocols, decentralized, finance protocols, decentralized games. Like that kind of has to be where it goes, in my opinion. This narrative is just no longer workable if you think that this was actually a fraud, which the math would dictate that it probably was.
So then play this forward. What happens to the Alt L1s that haven't launched yet or are just barely launched and are trying to, run a similar playbook?
You look at, I mean, the things that I think are really interesting are looking. I basically chart everything against ETH in my own mind, and like am mostly ETH denominated when I think about our portfolio. Like if you look at any of the alts since about the beginning of May, beginning of June, it's basically been down only versus Ethereum. And the same thing, curiously, with Bitcoin. I think Bitcoin is a different issue. It's mostly just like there's too many miners. But you look at ETH, it did not make a lower low. It made a higher low. You look at all the alts, they basically all made lower lows, except for a handful. And Bitcoin made a lower low as well. And so I think that's telling you something very specific about how much Ethereum was deposited into FTX last year, how much was sold to buy these other coins, and like what the scale of the whole was. But I mean, I think you have a couple of tailwinds. You have EIP 1559, which takes a lot of selling out of the equation, and you just have the absence of SBF selling Ethereum as well. And like those two things, in my mind, are why ETH is relatively outperforming at the moment.
You might be right there. I don't have any special insight, but it makes a lot of sense to me that he would do that, frankly. I think where I might push back a little bit and just, I don't know. I think there was someone said this a little while ago, but it stuck with me. It's like a lot of people lost a lot of money trying to find the next Amazon when maybe the thing to do is just actually buy Amazon at whatever price it was trading at. So I think that there will basically always be people who are looking for the next X thing. Even if it does just make sense to go into ETH, then I think there will always be some market. Because if I was putting my investor hat on for a second, like the point that you made about if you denominate everything in ETH, then basically everything's a money loser. Like even including the dApps that are built on the ETH ecosystem. And that I think eventually has to change. Otherwise, there's no reason for anyone to buy or invest in or use any of those things, because I would just want to buy ETH because that's going to outperform all of it.
I mean, to be clear, like even if Framework was denominated in ETH, and we're denominated in dollars technically, we have done very well in relation to ETH. So there are opportunities to invest in things that do better than ETH, but I think to Vance's point, it's more about the Alt L1s where you're competing on the same plane, the same market, which is what's the base layer and what's essentially the operating system for these applications.
Keep in mind, like all of the Alt L1 like pumps, for lack of a better word, were like mentally based on this framework of Solana going up first. Because if you think about it, it was Solana first, then it was Luna AVAC, and then it was Foam, right, or Phone. Phantom. The acronyms and
it's like
so absurd last year I can't even remember them.
Yeah.
Near was part of it, but like all of those martingale
Flamingo. There was a flamingo or something at one point.
Yeah. No, Phantom. But like all of those martingale pumped off of the mental framework of like Solana's going up. We can get a part of this as well. I think the next cycle you're not going to have that Solana outperformance that leads everyone to be like all L1s are where we need to go. I think you're going to have more organic price action around things that are generating fees and generating traction, and people are going to be, hopefully a little bit more mature and buy things that are early on the application layer versus like these massive all L1s that are just like fraudulently inflated.
All right, everyone, quick break from this episode to talk about our show sponsors, Avalanche. Many of you know Avalanche as the fast, reliable, and scalable layer 1. The folks at Avalanche have a really great message for those of you who are in the crypto industry right now, which is bear markets are for building. So while a bunch of our friends over in CeFi are kind of going through these struggles and travails, the folks at Avalanche have basically put their heads down and are shipping products that builders want. The latest solution? Elastic subnets.
Right. And just to expand on that, Avalanche is consistently upgrading all of their platforms, right? So on the platform side, you've got Elastic subnets, you've got new VMs. On the infrastructure side of things, you've got Core, which Mike, I know you used that the other day.
I was a bridgeor.
Yeah, exactly. Exactly. So they're upgrading the infrastructure side with Core and Enclave. The chain has had like no downtime, super customizable for devs. If you're a builder, avax.network, avax.network, great place to be.
But do Yano and I as well. So you definitely go check them out, but click the link at the bottom of this episode.
Click the link.
Otherwise, we're not going to get any credit. Come on. Yeah, click the link at the bottom. All right.
Give us the credit. Exactly. So yeah, big thanks to Avalanche. You just had a great experience with them the other day on the user side of things. So
go check them out, guys. Thank us later. Let's get back to the show.
Vance, do you think we'll see the price action that we've seen in the last couple of cycles, which is like Bitcoin moves, then ETH moves, then I guess last time it was like Alt L1s move, and then tokens move. Or like something further on the risk spectrum, like last time it was NFTs.
I think it starts even earlier than that, and I think we're starting to see like the beginnings of it. So like remember after COVID when the S&P 500 was ramping and crypto was doing nothing? I remember this because I was like, should I start buying like cruise ship stocks and like airline stocks? Because like these are like in
Yeah, I
meme
remember
stocks,
that.
like
Yeah.
crypto is just like left out of the equation. So it, like generally it's like bonds get bid, equities get bid, ETH Bitcoin then get bid. Then it's like what's next, and like that what's next question is like the key thing because that's like the narrative driver of the market. Is it like these Alt L1s that are kind of like rudderless that are just copy pasting Ethereum, or is it like people are finally getting interested in DeFi and games and liquid staking derivatives and things like that? My hope is that it goes into the more utility driven camp than just like let's go pump Sol Luna AVAX phone or whatever people are interested in now.
I think another big something that's important to think about is like where's the leverage ultimately going to come from. So when you think about what ended up driving the great financial crisis, there was these mortgage-backed securities, right? That you could chop them up a million different ways, and you could say this is a lower risk investment, and you kind of ladder on this entire system of derivatives on top of that. The leverage that drove this particular cycle and unwind was basically like these CeFi bucket shops and all piling into the same like two arbitrages that everyone saw. So
Do you know what the 10-year U.S. government bond has done in terms of yield in the last month? It's down almost 20%. So to play this out, once again, you've got yields going down, bonds are getting bid, stock market. So the S&P 500 is above, I think, 4K today, or it's close there. It's 39.50. You're starting to see the tea leaves and the line of sight to where the bid starts to get pumped. So yeah,
This makes the world make more sense to me, actually, because you didn't see this like Bitcoin should have gone beyond 65K in the last cycle. And both Bitcoin and ETH should have pumped higher in the last cycle. But now with that thesis, it's like if you believe what Vance just said, and Michael, what probably you agree with, the price of the majors was artificially suppressed in the last cycle. Yeah, that's interesting.
in lieu of these alt coins, alt assets that were getting higher a bid than they should have. So it's sort of like you can't just like you can't just like pull value out of the system, right? It's like one of those balloons where you like squeeze one end, it pops up on the other. That's kind of the core thesis here.
God, the Bitcoin maxis are gonna be so cringe in the next cycle.
Just wait for the ETH maxis.
I like ETH maxis? David Hoffman throws a good party.
Hey, there we go.
Did you see CoinDesk's like most influential? By the way, I don't think Mike is going to come back. I think he's having some struggles this week. He's like, I don't think he's coming back.
And then number 3.
Did you see the CoinDesk most influential list came out this week?
Oh my god!
We didn't get hit up.
It was a horrendous list. I was like, who is making this thing? Just a horrendous list. But B, the Bitcoin maxes were really, really upset because there were no Bitcoin maxes on it. So,
well, like
pour one out.
Well, Nick Carter was on there, but like they took some.
Nick Carter's not a Bitcoin maxi. I actually would not throw him in the Bitcoin maxi.
Yeah, not anymore. Maybe used to be.
I like Nick. If I was a Bitcoiner, I would probably like elect him president of like whatever council there is.
Well, what happened was Castle Island. Castle Island made some really good investments last year, this year. Still in 2022, unfortunately. They made some good investments. They made some DeFi investments, and the Bitcoin maxes were like, "You're not a true Bitcoiner," and he's like, "I'm getting returns for the fund. Like, sue me." And so they got pissed at him.
Right, and then didn't he have the whole like, "Hey, I've actually like really taken a hard look at the Bitcoin maxi community," and didn't he like change his name to Nick.eth or something?
Yeah, something like that. Yeah, I love it. I got a question for you guys as we wait for Mike to potentially come back. So, Apes and Punks both trading at about 63 floor right now. I think technically Apes might be like 1 or 2 ETH higher. What would you? Ooh, your lawyer won't let me ask this question. What?
No, you can ask this question.
What do you like more, apes or punks at these prices?
Oh,
Or okay, what question do you want me to ask there, Vince?
I mean, I think I own like a couple CryptoPunks or something like that.
Oh, aren't you so cool?
No, I literally
Just kidding,
bought them.
kidding.
I bought them because Michael and I started an NFT startup before we started Framework, and then for the first year and a half, we refused to do anything NFT oriented because like we had so much scar tissue. And then I bought literally the absolute Pico top of CryptoPunks to like see what it felt like. And it was the most anticlimactic experience of my entire life. Like
See what it felt like. You want like your screen to pop up, like you want...
I showed my girlfriend. I was like, look, it's like that's not that cool. I was like,
You're not sick.
Cool. I mean, I think the execution risk of the Bored Ape metaverse is like very high.
Yeah.
If they blow that, you kind of like blow up the whole ecosystem. But like if it succeeds, maybe it's a lot more valuable. Kind of like ETH versus like if punks are like the Bitcoin and like there's never anything that's going to happen with punks. I also just like, I think the punks avatar is iconic. You know, I think there is a market for that at least. Like the Bored Apes are just like kind of ugly to me. I am wearing a Bored Apes hoodie right now though, because they sent this to me, so thank you. But I do love free merchandise, I think is the point.
I do too. God, that's why we do a pod, is to get the free merch.
Dude, I wore a BlockFi shirt to the gym the other day, and people were like,
Mike was repping a Luna shirt the other day. Just got to do it. It's free. Vance, why isn't your PFP your punk on Twitter?
because I bought it into my doxed wallet or my undoxed wallet, and I don't want people to know that it's mine.
Crypto
gotta
problem.
have that.
Crypto
Gotta
problem
have
right
that. Gotta have that doxed wallet.
there. Yeah.
It's the bad part about a one-of-one NFT. You can't really send it anywhere else and have people not know who you are.
No, that's true. All right. Let's talk about Maple. So, Maple got on the wrong side of a loan to orthogonal. Michael, you want to do us the justice of summing this up?
Yeah, and just as context, we are investors in Maple. Not providing any financial advice, et cetera, et cetera. My read of the situation, and just to describe Maple a little bit, they are a platform that has three parties that facilitate the ecosystem. You've got the lenders who put capital in, and usually it's in the form of USDC or sometimes ETH, into a pool. Then you've got borrowers on the other side of that pool, and the people who are making the credit decisions are what's called the pool delegates. They take a fee, so they get a cut of the loan origination fee. I think potentially sometimes part of the interest. But essentially, the ecosystem is Maple is just the software solution, and you've got pool delegates who take on the credit risk, usually provide some first loss capital to the pool itself, and then they're making credit decisions for the borrowers, and borrowers pay lenders with interest and principal. Ultimately, what happened here, and we've been a lender. I think we've also been a borrower. We're users of the platform and still think that the platform is going to outlast this situation. But essentially, Maven 11 was the pool delegate for a pool that lent a substantial amount of the pool's assets to a trading company, a market making company called Orthogonal Trading. Orthogonal Trading had assets, it seems to be, on FTX. Originally, when the FTX situation blew up, Orthogonal said that the losses were like 10% of what they actually were. So there was a misdirection or just sort of an untruth that was told to the credit deciders here. And essentially, the hole was a lot bigger. And so it became apparent in public that the hole was a lot larger. People who are lenders in this situation are going to take a loss on the capital that they lent. And I'm not sure exactly what the resolution will be, but Maven 11, essentially is the credit decider here. And they probably have some, either capital backstop that they lose or some credit, reputational risk that they have as well. So tough to see all around. This is just like part of the blowback. And frankly, when we were talking with the teams, all the different parties, related to this, way back a couple weeks and a couple months ago, it seemed like we got off scot-free and there wasn't any situation, there wasn't any blowback, there wasn't any issue, and in reality, the issue was larger than we were initially led on. But ultimately, what I'd say is like this isn't a software or a platform issue, and it's more of a credit issue in a particular situation. That's the only kind of directive going forward.
When you say it's more of a credit issue, I mean, like that's the same issue that like a BlockFi had. BlockFi didn't have a software issue. BlockFi had a credit issue.
So very, very distinct difference in that BlockFi in this analogy was both the users of the platform were the lenders, the borrowers were the borrowers, but BlockFi was the pool delegate. BlockFi was the pool delegate as well as the software solution, the platform.
I see.
So yes, they are the platform, but they were also making the credit decisions of who to lend to. So there is a very, very clear difference.
So, I mean, defaults are a normal thing in any platform, right? Like, when a borrower defaults, that's basically a failure in underwriting. That's like the risk evaluation went wrong somewhere. Though I guess that's like it's normal to default, but you would hope that if the risk management and like your risk engine is good enough, then that risk gets priced into any loan, into every loan origination, which then helps create this like reserve to account for defaults, right? So I guess a couple questions here. One is just to make sure I understand the Maple system, does Maple do the underwriting or who does the underwriting? The
pool delegate.
Pool delegate, right? Okay.
And the pool delegate, so this is a very kind of clear difference. The pool delegate for each individual pool. And so there are, when we were participating, there were like 4 or 5, 6 or 7 different pools. Each one of them has each one of them has a different pool delegate who is making the credit decisions, who's doing the risk management, who's also putting up first loss capital. And so there is some skin in the game, but they're also the ones who are making the decisions. It's sort of like saying, okay, BlockFi failed, and therefore that's an indictment on the internet because all of this was running over the internet. It's not the same thing. If you're running the platform, you have the software, you have the network, but you also are making the credit decisions.
So like on the positive, so I love Maple and like Sid and everything that they built. On the positive side of this, it's defaults happen. They had like a 99.7% repayment rate on 2 billion of loans issued. After this week, that repayment rate goes down to like 98.5. Platforms getting better every single month. Like that's the positive side. Maybe the pessimistic side of this is like, if this had been big enough, this could have taken down. They're lucky that this was so small. I would say they got pretty lucky here.
Yeah, I think there's learnings too. Like Maple probably needs, and like Maple is like, there's Maple version 1, like Maple version 2 is coming out next year. And part of Maple version 2 is just like better underwriting tools, like proof of reserve, proof of liability, giving tools to the pool delegate to understand like where exactly are your liabilities in real time. Because if you looked on, and this may have not have told you anything, but like if you looked at Nansen.ai, you can see orthogonal depositing, like $23 million to FTX. And at that point, you probably know that like, okay, these people are stuck here. And that wouldn't have helped you because the money is just like gone at that point. But like having a direct understanding on a position by position, counterparty by counterparty basis of where things are, I think that's where this is going. And there's always going to be a need for under collateralized or like at collateral borrow. That's not going away. And all of the alternatives of today are completely dead.
Yeah.
I was about to say, especially with Genesis blowing up, BlockFi blowing up, like the centralized counterparties, like let's just run this out and take it to its logical conclusion. The thing that we've been saying for the last 6 months is that CeFi, centralized finance, where you have black box institutions, ultimately can run away with the value and they can take it and they can do whatever they want with it, right? It's a black box. When you have the ability to have transparency and decentralization, that's where you have a competitively advantaged position relative to the centralized black box providers. Better tooling, better understanding, all of that stuff makes the most sense and is going to be, literally months away. But if you have Genesis, if you had Genesis's loan book in the same manner that Maple has their loan book, you would have been able to figure out the insolvency or the illiquidity way sooner because it's all on chain. The only situation here, I think the other big lesson here from pool delegate perspective, when you're making creditworthy decisions, don't put over 40% of the pool into a single centralized entity. Like, that's just not smart. So like that's more on that particular situation. But as a lender, you can see that pool delegate decided to put 40% with orthogonal trading. You make that decision, and you make that decision every day that you put assets into that pool. And so the ability to see that is just a competitive advantage versus something that we've seen blow up historically.
Yeah. I think this just shows how big of an opportunity underwriting is in crypto, and to make, yeah, I don't know. I hadn't thought about that much, but like you basically just need much faster underwriting. You need better underwriting. You need more data available on chain to underwrite things on chain. Yeah. Are you guys investing in that? Or is Maple your play on that? Or how do you invest in that?
One of our big themes is like rebuilding DeFi, and like rebuilding it not from like a position of like we need to go launch like 50 more Uniswap V2 clones, but like underwriting that makes sense on an under-collateralized basis on chain, regulated platforms in the US that people can use to do DeFi things without going on chain explicitly. Like even things like exchange connectors and low latency trading infrastructure, like these are all the things that are going to lead to the next boom in DeFi. The bad news is that they don't all have a token. Like retail can't participate in all of them. Most of them are like private startup investments that are equity. But the future of DeFi is like bright. There's like a lot of very obvious holes that need to be filled. And I think like once those holes get filled, the market's going to be entirely different going forward. We're also funding like new prop firms that could be like the next Jump Trading, things like that. Like building those market participants and those personas is also part of kind of what we're doing. And so we're not just like building the tools, we're also building the users and funding them. I don't know. I think DeFi has a very bright future ahead of it. It just needs more tooling, more infrastructure, and just like better underwriting just generally.
98.5% is a pretty amazing statistic.
So you guys are optimistic Maple makes it out of this?
Yeah. So, like there's startups that we worry about that don't have product market fit, that we're like trying to like steer towards like having an audience of people who want to use it. Maple does not have that problem. Maple has like an egg on its face problem and like a we need to launch version 2 problem, but Sid, the team, like they're high quality entrepreneurs. They have a product that people want. Like it's just a matter of weathering the storm, and they have the capital to make it. So we're not too concerned. It's just like awkward. Like we're friends with the Maple 11 guys. Like we were friends with Josh and Orthogonal, and like we're investors in some of their projects as well. And they're just like
what happened to Orthogonal? They just got on the wrong side of some trades, or
probably a mixture of bad trades and leaving money in these places. But like you meet all that's bull markets, and like at the end of the bull market, it's kind of like, oh, you're in a group chat with like all of them, and like one of them blew up the other's pool, and like now you have to like like play intermediator. It's just like a shitty situation. You don't want to be in that situation.
And it's tough too, right? Like everybody had some pain, whether it's direct, indirect. Like the contagions the different contagions have spread extremely far. Where it gets to be unrecoverable is misleading people to think that there isn't as big of a hole as there really is, and that I think that's the toughest part.
ChatGPT.
I like it.
I just want to get you guys' take, and I'm curious if you guys. I mean, obviously it's just fucking cool. We don't have to. Hopefully, people know it at this point. But I'm just curious if you think it has implications for like either your business or for any of your portcos.
Definitely has implications for our business. I would say that like my impression of ChatGPT and generally the AI suite of software is that it's amazing productivity software. And that allows people to iterate faster, it allows entrepreneurs to ship faster. Generally, I think it leads to like a productivity boom in the US economy, or just like the global economy, which is really positive. And I think the setup is kind of like, you had Google in 2001 really start to gain steam and traction as a search engine, and it made everyone's lives a lot easier. It allowed people to be wealthier, it allowed them more free time to do things they don't want, and then it's like, or that they want to do. And then the question is like, okay, what is the social network that gets built after all this productivity software frees people up to do more things, be wealthier, experiment with more things? And I think the social network is crypto. And like, instead of like having the next Facebook, Instagram, TikTok, I think like the social network of things like Ethereum, the identity ecosystem, are really the things that like are allowed to really flourish, because all of this productivity has basically been taken and spread around all of these different industries. And so like, if it was just crypto as a technology trying to lead us out of like this recession, that's going to be hard. Crypto doesn't like help people solve day-to-day problems that frees them up. But like Chat GPT, like I'm looking at this thing and thinking like, like, do we need like another analyst? Like, can I just ask this thing questions? Like, and I'm sure that that's a lot of the thought process of many people running businesses right now, is that it's going to get easier for them, which is great. That's what you want. You want a productivity boom.
So I totally agree with everything Vance said. Maybe a different take on this is I think productivity is one of the one of the things that gets enabled here. One of the things that I was thinking about is this in relation to DAOs. And historically, yes, you've had chatbots, you've had widgets, you've had the ability to have like customer support be in a different location from like the core team and like the sales team, or like the people that you call when you want to buy something. Like those people, are elsewhere. I think you take all of the things that used to be like human scale issues for any of these large scale companies, and you can now put that into a chatbot that has artificial intelligence enough to be easy to work with, easy to understand, and like something that a DAO and a set of smart contracts can actually have control over. And think about that. If you wanted to build an institution that had customer support, that had inside sales, that had a lot of these functions, but was a DAO and had software as the core infrastructure of what was enabling this institution, you would be able to integrate Chat GPT and have that be sort of like the interface for people who still want to pick up the phone, who still want to chat with a customer support agent. Those types of opportunities are now possible for software. Just so happens that DAOs are basically software institutions.
It's really interesting. Did you guys listen to All In this week?
No. Or last week? Yeah.
Last week, I guess. One of the things they were talking about was I only listened to like half of it, but one of the things they were talking about is this is like this kind of marks the Pico top of SaaS, or like SaaS. It's going to be less and less about SaaS now, which I think everyone, that's not a unique take. Everyone's like, okay, yeah, we've maxed out like how many SaaS businesses can be successful businesses, but talking about how, okay, now you've got this like general data set basically that feeds into GBT, and the future like really valuable companies will basically take that generalized data set and combine it with one of their own. So the example that and that's where a lot of the power will come from. So the example that Chamath gave is like, okay, well, can you take the data set that ChatGPT is built off of? You go acquire a hospital system. Now you're mashing up like the healthcare data system with your ChatGPT data system, and now that's a really, really powerful healthcare GBT data set or something like that. So, yeah.
I worry about like, is it real? Like, okay, like say you combine the ChatGPT with the hospital system data. What do you get tactically? Like, what is the specific output of those two things put together? Better medical recommendations? More efficient record management?
I mean, to play this through, I think you could have sort of like an interface of you going to the doctor that's not, it's like, oh, you had a shoulder surgery 4 years ago. Like, yeah, your shoulder hurts. Okay, like we can get you some basic information and some basic treatment if, we can read your medical records and have a PII HIPAA compliant conversation, right? But
like
I guess
WebMD and Google stuff.
No. What I think it gets you is like the ability to, I don't know, look at a bunch of scans and be like, oh wow, that like there's a 99.99% chance that that's cancer, instead of like some random doctor being like, yeah, that looks like cancer.
Totally, and that may improve the outcomes for the the 0.1% of people who didn't get the right diagnosis. Yeah. But like, I really want to be specific about like what is the benefit of these two things, and like, is this just better WebMD or a slightly better search engine? Like, it's unclear to me.
I don't know. I've been thinking about it a lot because obviously the nature of our business is content and media, right? So like it has a direct implication. We already use DALL-E for our business. Like DALL-E is now, if you go on our website, like DALL-E, our copy editor who has no design background, we don't have to send our images to a designer before they go on the site now. We just use DALL-E. Like we'll type in like picture of a guy on the beach with a Bitcoin in the background. Boom, there's your cover art. So like we use it. We use Dolly for Blockworks. It's really, really cool. So I put in a news story. I was like, this weekend, I was like, oh, go write a news story on Sam Bankman-Fried. And it was really bad because it was like, Sam is this great guy. He's a philanthropist. And but the reason that happened is because the data set for ChatGPT cuts off at the end of 2021. So it doesn't have the new data. But GPT-4 is coming next year, mid 2023. And that pulls in 500 times more data than GPT-3. 500 times more data. And the most important thing is that it pulls in live Google search data. So I bet if I asked GPT-4, like, go write a news story on, right? So like so I've been thinking about this for our business. It's like, what are the implications on journalism? What are the implications on podcasts? There's a new podcasting tool someone showed me where you can put in someone. It's like, hey, go put in, go create an episode of Jason and Mike talking about the fact that ETH just went to $10 million, and use then and talk about this, and this news story, and it spits out a podcast and uses our voices, and it's like that's a podcast. It's just really interesting. I don't know. I'm like still definitely trying to wrap my head around it.
I have like two thoughts on this. Number one, at Netflix, like back in the day when I used to work at Netflix, getting subtitles and then dubs, so like people speaking the native language so that it made sense, like if you were just listening to the movie, was such a huge cost center and took so long because we need to find like to dub it over the right guy who spoke Japanese, who could read English, but like had like an actor level voice. Like that is like a business process that like entirely gets like used by this and kind of removed. I think that's like, you're going to see a lot of productivity gains, to my original point. I also think it's funny that like in the original descriptions of AI, everyone was like, oh yeah, AI is going to make, you know, everything except for like the human creative jobs like irrelevant. Like, you know, we're all going to be free to do like macaroni noodle art and, you know, finger paintings for the rest of our lives. And like, that's what the human race will end up doing. And like, in reality, the first thing that AI knocks out is like the designers, the copywriters, the creative people that need to like write stories. Like those are kind of the first to go. And so like, I do feel like it has been a little oversold as like a friendly to creative human tool. It really is just like replacing the need for most people, and, you know, replacing them with people who can like ask the right questions or describe the right scenarios, not like the right painters.
Yeah. I think one of the implications for our business is going to be that there's actually actually just for media in general, and there's going to be a return to what journalism I think used to be, which is you used to have this huge advantage when you broke a story because you would have you'd have like, I don't know, 24-hour lead on any other competitor, right? Because it would be printed in a newspaper, and then every other newspaper would be like, ah, crap, that's the story? Okay, then we'll run it tomorrow. Then what happened is like, now that went from 24 hours to like 15 seconds. Like if we post a news story, CoinDesk's like, oh crap, there's a news story? All right, cool, we're going to get the same news story up there. I think there's going to be a return if like ChatGPT can write these stories pretty quickly, and like using APIs, you can automate all this stuff. There's going to be a return to original journalism, breaking news, getting scoops, things like that. I don't know. That's one thesis.
That's a positive take.
Yeah.
It definitely makes it more of like an individual talented sport. Like all of the people who are kind of commodities, like they're kind of going to be reduced by this productivity software. But everyone else who's really carrying their own weight is going to be entirely distinguishable from everybody else. And so like it makes the orgs a lot top heavier in my mind. Like if you can just, if I can just like ask GPT to make me a deck for like, you know, when we go out and raise money, like we don't need people to do that. Yeah. It's going to be very interesting to see orgs develop with this in mind.
I mean, I think basically every SaaS company too is just going to plug this into some version of ChatGPT, or excuse me, of GPT-3 into their thing. So have you guys used Pitch.com? It's like a really nice way to create decks. It's like much better than Google Slides. And like for me, it decreases the time to create a deck. Like if it takes me like 10 hours to create a deck, on Pitch.com it takes like 2 hours to create like this beautiful deck. You could see a world where it takes like 30, like, I don't know, 5 minutes to create a deck. If I just put in like a one-pager Google Doc, I'm like, hey, go create a deck based on this, or like go create a deck based on this prompt or something. So, yeah.
Dude, and like outside of that, think about like homework when you were a kid.
I mean, that's what I was going to say.
How do you teach kids to work at? I mean, also like, is that even a relevant question? Do you need kids to go memorize stuff? I mean, probably as like a mental exercise to build memory strength, but like, I don't know.
Yeah, fourth grade Michael is like, where was this?
Where, dude, we're pre-internet kids too. I mean, I was at least a pre-internet kid. Like, couldn't Google stuff.
I feel like we've been reading about AI for a decade, and now it's like I feel like this was the moment. Do you guys remember when you first saw the iPhone? I remember where I was. I was in like 7th or 8th grade, and I was like sitting on the, like, we called them the stacks. There were these like outside blocks where like the cool 8th graders hung out, you know. And my friend, maybe it was 7th grade. My friend Mia, she had like the iPhone 3 or something, and she's like, "Look at this thing." I was like, "Oh my, it's nuts!" Like mind blowing. And I actually had a similar thing experience the first time I used Uniswap. I was like, wait, I just traded and I didn't open an account and like didn't send, like, it was one of those. And I had that with using ChatGPT. It was.
So I was literally about to say the instances that I can remember super viscerally are, number one, the first time playing a computer game, like using a computer and having a digital screen where it's point and click. I mean, it seems rudimentary, but it always does in retrospect. The first time sending an IM and like having communications over the internet with another person that I knew in the real world. The iPhone was definitely a moment. Sending an Ethereum transaction, I think is similar to your Uniswap experience. ChatGPT is up there.
Yeah. Let me give like the bear take on ChatGPT. I was talking with Smarter Child on AOL Instant Messenger when I was like 14. I'm sure you guys were as well. Like the automated AI chatbot. Maybe this is just like a productivity tool that fits into existing applications in business org. Maybe it makes it a little bit lighter, but it's like not entirely game changing. There aren't many specific end use cases other than like media content and some commerce that could really use this. Like, I do still think the burden of proof is on like OpenAI, ChatGPT to like prove its usefulness as at least an enterprise, software. But like, keep in mind, the really big tech outcomes over the past 20 years have been the social networks. Like, how do you build a social network out of AIs?
I don't think you need to.
Does that even make sense? I think that's the rate limiter for how big this can get. Like, can this become a social network?
So let me take the bull side of this, which is, I think, yes, over the last decade, the largest outcomes have been social networks. The previous decade, and still one of the largest outcomes ever in the history of capitalism, is a search engine. And I think ChatGPT or any sort of AI originated search experience is just going to be fundamentally better than typing text into a text box. Like that model is actually going to be more fundamentally interesting. That becomes if you're changing up what the text box is and what Google homepage is, you now have the greatest money printing business, because that previously was the greatest money printing business for Google.
Yeah, but like Google's going to respond to this. I think they're probably like a few months away from unleashing something that looks like ChatGPT, but for search queries. I think that nukes a good part of their search ad business. Like that's going to be fundamentally negative for Google. But like, maybe that's the story. Like, maybe these companies don't actually have a license to print money in the way that they actually envisioned, and AI actually strips those profits out and gives them back to the consumer, the advertiser, etc. Like, I don't know. There's going to be some successful enterprise software companies created for this, but generally, I think this is just like stripping costs out of the system.
But that's the so I agree with that, Vance. But that's the best. But that's the best thing. Like I agree with you. I don't think there's going to be these like a huge. There's all these. I think this is going to be the next big bubble in VC, and I'm already getting pitches in my inbox like, oh, we're built on GBT. Like I'm already seeing all those. And they're a bunch of fluff in my mind. And there's going to be 10,000 of these funded, and most of them won't make it. But the best thing in my mind about this is not the companies that get built on top of it. It's how existing companies can use, and new startups can use this to decrease the cost. It's like when we were starting off, when we started Blockworks, we built using a Squarespace website. That saved us like to create an old website, you used to have to like get a server and then get like, and we used like 99 designs. It's like all these little little things like save entrepreneurs so much time and so much money, and they save companies time and companies money, and like entrepreneurs make the world a better place. So
it's a trade-off of producer surplus to consumer surplus.
Yeah.
And like that equation in economic terms is exactly what you're describing. Either it's going to be realized through lower cost price points of getting access to these different services, or it's going to be produced in less people working at these companies and therefore more efficiently run companies. Like it's going to be cost savings fundamentally, but I don't know. I mean, I agree it's probably bubble-ish and probably will continue to get bubble-ish because we just run the same playbook every single 2 to 3 years. But I think one of the things that I think about with GPT and sort of any exponential scale technology is that it always looks small in the first couple of years, but the fact that it's exponential scale means that it surpasses expectations at some point. And I think that there is a moment where it will surpass expectations, and like AI has been on that path for literally a decade now.
So the other one I'll say is that we actually have numbers on how many of these startups have been funded and how much has been raised. So about 12 billion has been raised by AI startups, and there's about 480 of them today.
Cool, guys. Good chat. Good pod.
Good pod.
We are entering 2023 where there is going to be no narratives. It's going to be tough to catch a narrative. We're the last stage of the bear cycle, where it is capitulation.
I disagree. I think because there's such a void, everybody's going to go home for the holidays. You're going to come back refreshed, renewed. It's like, great, we're going to start a new year.
People are so tired of 2022. It is
Exactly.
it is remarkable. It's remarkable. I talked to a fund the other day who's like, they're like, yeah, we have a bunch of dry powder. We're just not allocating because we don't want to deal with any of the paperwork and like deal with stuff in 2022. And some advertisers, like Blockworks. One of the ways we make money is, and people are like, yeah, we've got money. We raised like 120, 3 months ago. We're fine, but like, I'm just done with 2022. I'm like, oh my god, all right.
I was talking with one of the investors on our team, and he was saying he had 2 instances where some founders sent him Calendlies, but the first available spot was like January 5th.
I respect it. Just throw it in the towel, punt to the new year.
Next year.
Yeah. Cool, fellas. Great pod. See you guys next week.
See ya.
Later.